Good afternoon, everyone. This is Christy of Van Ahn & Company. I'm going to go over the markets for the day. It is Thursday, January 7th. You had some negative outside markets once again overnight. China came in here and halted their stock market for the second time in 4 days. What you had was it down 6 to 7%, and so that's kind of a repeat to what you're seeing earlier in the week, and that spills over into our stock markets quite a bit. And so you had our Dow tank once again down anywhere from 200 to 400 points throughout the day, and really that puts a lot of pressure on it. Not only that, but China's a big player in the economy. If they're going to struggle, and that's what this, their stock markets are based on, is poor economic news. If they're going to struggle, that's going to hurt the worldwide economy as far as that goes. And it's also, you're looking into these grain markets. China's a big buyer into these grain markets, especially soybeans. And so you're getting a little bit uneasier on the market, but grains fought it off quite well. And then you actually had the dollar start to fade into the day, being down about 78 to the close. And that actually is beneficial towards commodities. So it helped the grains come back a little bit, but overall very quiet trade, waiting for some direction coming into Tuesday's report. So you had mixed reports. Wheat was the one that benefited the most from the dollar. It was down a couple cents and then ended up closing anywhere to about 2 to 6 cents higher on the day. Corn market was a follower, up just a penny or so, and then bean market didn't do a whole lot, steady to down 1 to up 1. So it's very quiet there. Different situation into the meat markets with live cattle, feeder cattle both closing lock limit lower. You will have expanded limits tomorrow as far as that goes. Nothing really changed there. It might just be those outside markets finally catching up with the cattle market. You've had live or feeder cattle specifically be able to fight off those negative markets for a while now, being down anywhere from $1 to $2 on the day and then ending up being able to close slightly positive. That just wasn't the situation you saw today. And then lean hogs also followed suit. Like I said, those outside markets pretty negative, with the Dow down about over 400 points at one point. And then the dollar started to fade, and then crude was actually lower too. That puts it in the mid 33s per barrel. That is extremely low. It came out about a couple weeks ago that Russia was planning on $30 a barrel, and I don't think a lot of people believed it. It looks like it's really achievable now at this point. You're starting to have some economic problems follow suit in Saudi for that. Russia is going to be starting to hurt pretty soon too. So there's some economic factors to that. Overall, these grain markets, what they're looking for is the fact that Brazil has a little bit too much rain coming in, which is a little bit different from where you've been. They're extremely dry, and so but it just seems like they're going to get too much rain at once. So to watch that and see if a too much rain story actually pans out, that'll be the interesting thing. Otherwise, they're waiting next week to see direction as far as that goes, and cattle will be looking for some cash trade. I do have to close with a disclaimer: trading in futures and options involves risk or loss and may not be suitable for all producers. Have a great day.